TheNBI.com. This is John. This report is for the 14th of November. Well, I was unable to do a couple of video reports here during a rather explosive time, and internet and technical reasons just wasn't able to do that. Some of the areas in Italy are still a little remote. We're out in Lake Garda. Parma's relatively good, but up in the mountain ranges there, not always effective. But needless to say, since our initial report Monday, we were looking at transitional move that was starting here with the turn of magenta coming back up, and then we had the dip, and sure enough, that produced enough to get us over the 38. Once over the 38%, it was pretty clean. I mean, we had this little brief dip down before the massive upside explosion off of the CPI numbers, which is quite interesting because that was going on at the exact same time that you were having the major crypto event with the FTX collapse, and that really created a lot of interesting sideline turmoils. And that the fact that they think that inflation is cooling and that somehow is a market buy is an interesting one. Um, the economics of it don't quite make as much sense. I mean, we're going to go ahead and look at the data of what we're seeing elsewhere. But for now, we follow what the readings are. And as long as you got magenta leading, that's still bullish. However, you can see from a NASDAQ viewpoint, you're right at the 50%. Magenta fade at this particular point is going to do the exact same thing it did over here. And likewise, further back. It's just a matter of, we're not even looking at a situation where you're in a good, one of those good continuation moves where you have white MBI trailing solo. You've actually got it quite elevated. So a pivot lower is going to leave the white MBI exposure, which usually leads to a move towards 0%. Just saying. I mean, that's just what we understand from what takes place, and that's all we can utilize, and it repeats itself on a regular basis. So uh, we don't feel real bad about following what it explains. But here you have oil still up in the 88 range. Now that's no difference than we've seen over the last, since what, July here. So where's the reduction? This is where this number shenanigans that start to go over. And when you start looking at month over month, well, when it's been elevated for long enough, it doesn't appear like it's growing, but it's not abating. There's certainly no improvement to the situation. There's not going to be any help to businesses or anything from that standpoint. So it seems a bit nonsensical, the excitement over it. But here we had an interesting one because you had the beginnings of a little bit of stabilization rally as the ECB and them were taking charge and saying how they were, raising rates and keeping up with the U.S. But then coincidentally, you had the cryptocurrency exchange with the FTX collapsing, really creating a spike because all the people liquidating and getting out had to put their money into something either in dollars or in euros, and tended to be more outside currency situation um, because the spike, again, no real justification for massive euro jump other than the fact that they think that the dollar is somehow going to fade into obscurity because the Fed is going to stop raising rates. And it's literally what that's an indication. It suggests that the Fed has changed its mind. And bond market's not disagreeing in this particular sense. Uh, 97, that's a suggestion that, they're going to stop or really not continue on with the uh, prior stated targets. Now, that is possible that they may go slower uh, given those numbers, because obviously, if it's accurate, then things are stabilizing somewhat and they may get the soft landing that they've been praying for. It's a Again, it takes time. It takes 4 to 6 months for even those first rates to start to really work their way through the economy. And we knew that we were poised for this post Thanksgiving start to the holiday trade, which is usually biased to the upside anyway. And treasuries, though, That's a pretty significant bounce coming off of where we were from the really, like I've said, between this 23% and about 93, 94 was a reasonable area for stabilization within the Fed uh, market area as far as where they wanted to maintain things. I still think that we'll probably fit more into that in time. But that's the beauty of these markets. I mean, we get these accelerations, fadebacks, and pops again, and that's the whole point of trading is following each of those different nuances. Same thing here, gold making its resurgence. Now, if things were so rosy from a CPI, why would gold be rising again? These are some just strange counter anomalies to uh, reality versus what's being said. Because gold is going to be rising if inflation and everything is tamed in completely, or they just feel no need to contain it. And it's actually moving towards the real world pressure that already exists for the commodity. And I think that's probably more likely the case. So here it is, the Bitcoin. It had been stabilizing for all these months, looking rather good, and surprisingly so relative to what the market had been doing. The volatility was nil. Some were saying that it was, being artificially propped up or supported. Uh, we could say that about any given thing. What was interesting is in the decline. I mean, you had this major disruption in cryptocurrencies with this FTX thing, and only dropping 20 or so percent. That's conservative. That's a little interesting because there was a lot of liquidation taking place and a lot of exchanges moving money, and that still not clear everything that's transpired from that. But um, this should have been far uglier. You seeing some of the companies taking a beating just with missing earnings. I mean, you had a major infrastructure change here uh, take place, and only this level of decline. Um, so, two ways you can look at that: incredibly stable setup now, um, or just not that many independent sellers beyond some large holders. And this may be, in fact, why we're seeing some of the stabilization. It's just not being traded as actively. So then we look to ETH because it's like, okay, well, ETH has a bit more of a practical applications within um, the whole space. All the different elements that they're involved in, from just really even wanting the Web 3.0 and so on. But very similar move, taking it back down to the 12. So, we're looking at a situation where we're still not really buy setup at this particular stage, but could be interesting in a decline mode for those who think they missed out on a move. Well, now you get your second chance. If you consider checking second chance or more of a gamble, that really becomes the interesting one. But as a side play, I think it becomes interesting when you're talking about having variable diversification, whether it's dollars, euros, you know, and just the mix. I mean, throwing that in there is not a horrible thing. So from a Bitcoin standpoint, I mean, not Bitcoin, but 50K ES S&Ps, we had the decline. It was pretty clean going through there, and then the turnaround when those numbers were reported, and that was just a huge spike of the magenta shooting up through there, and that led to some nice rises. And then we started to see a little bit of softness here towards the end of the day. I don't think it's all that horrible though, because you can see the major drop off of white. Yes, magenta is still slightly below, and you can see it's reflected in that general weakness. But you would expect to see further decline in magenta not taking place at this particular moment, though we are coming right off a clean DOC spread, which took place right back up at the peaks. So overall, that's pretty congruent. Intraday, I think the ranges again. This is what we talked about, the volatility for coming into this month was a continuation of what we were seeing from the previous months, and some of them can argue that that's a lack of liquidity that's creating some of these more exacerbated moves. But they're just very clean, one-sided setups, and then they convert to another one. Um, I put a little triangle around this one because I wanted to point something like this out where we're in a decline, and then we get a sudden burst from the green in that where magenta pops back above but then pivots. This is one of those where you have a couple of options. One's when the magenta is getting above yellow, being conservative with the stops, particularly right around the 50%, because this is a high pivot zone. From my viewpoint, it's one of those where you start to see a little bit of support from the magenta. I'm covering towards that 38% line. When you pop back up above and looks pretty clean, you've got to be willing to flip back the other direction when you see the weakness develop again with the white MBI leading. Sure, you still have magenta going, so definitely I'm one of those where I would just hold off until I see a nice pop in price, and then literally at the end of the box right here is where you get your dip of the magenta below yellow, but correspondingly, you also end up with steel below cyan and a rising orange. And those are all the perfect recipes. And you can see what it did. It literally fulfilled that white MBI spike with the move towards zero. So just wanted to throw that one out because, you know, the idea of getting head faked in these kind of situations, um, you don't want that to occur. When you do see that white leading on there's your probabilities of it breaking to the upside on that are much lower. Um, than the other direction. And so it's just one of those where I think you can be conservative with stops and setups to mitigate any real exposure, but it becomes a very effective trade. Now, in this particular case, we ended up with quite a move from where it was. So it was right around that uh, 39.85 range, and then you're dropping all the way down to, just below 60. That's pretty good, particularly today. But then again, of course, there were like four or five others of these setups going through, and didn't have as many moves with these spike ups where I would have expected to see more cyan under red. And I think that belies a critical element when you're not seeing like this setup where you have sustained cyan under reds. Those tend to get choppier. And I think that's less of a bull case. I'm looking for those extended runs where, like over here, where I start to see a nice commitment of the cyan under red always by configuration. I think you have much better momentum uh, runs with that one. It's a little easier to follow and be a little more conservative with the stops, allowing it to have its flexibility, and then literally waiting for that DOC breakdown as well as a shakeout breakdown, which literally took place a little further on. You ended up with these uh, starting to get lower peaks. This one was a little bit higher, and then as it broke down, you ended up with also DOC spread where the shakeout was making successively lower highs on higher high in price, and that started a clean move. Again, I hadn't changed any of these outlet levels, and still we continue to move right back in conjunction to them, where they're either support at one point and then their resistance on the backside of it. Don't want to run too long on this, but we'll have plenty more to say about the different things taking place as they're unfolding. But definitely a dynamic time, certainly exciting trading, and I think from an intraday standpoint, a little bit easier than from the macro side at this particular stage. Uh, but we'll go from there. As always, though, trade well. Look for me on Skype chat.